Welcome back. Well, the manufacturers' confidence in Nigeria's economy dropped to the lowest level in nearly 2 years. In the second quarter of this year, the aggregate manufacturers' CEO confidence index, that's the MCCI of the Manufacturers Association of Nigeria, declined for the third straight quarter to 52.7 points in the second quarter from 54.1 points in the previous quarter. Also, data from Stanbic IBTC PMI that shows business activity fell to 50.2 points in August. Well, joining me now for analysis is Mr. Ayodeji Ebo, MD, Optimus by AfriInvest. Great to have you on the show, Mr. Ayodeji.
Yeah, good morning, and thanks for having me.
Fantastic. Thank you for starting your morning with us here on Business Morning. But we see there, both indicators are signaling business activity is slowing, but still above the 50-point level. From all indications, we see business was quite tough in August. How are you seeing it?
Okay, thanks. So it's the reality. So if we look at the several factors that continue to weigh down on businesses, you look at from the FX. So for those that were even accessing FX at the official window, we saw a 40% depreciation in that space. You look at also the parallel market have moved by almost 20%, and liquidity is not there. So there's a lot of uncertainty within that space. You also want to look at fuel prices that fits into transportation, cost of production. That continues to also weigh. And as costs rise, it will also impact on the demand. We can see inflation rate at 24% as at July. Means that a lot of purchasing power will be impacted, which would reduce the ability for Nigerians to demand for things. So it's really a worrying time and concerning time for businesses. It's really tough times because things are, in terms of cost of production, continue to rise. And that will be impacting on bottom line. And a lot of companies feed more on, when you look at loans to run their business. So you have the cost of finance running and operational cost also increasing. And if you have FX input in terms of having to have, you import items, the cost has increased, and a lot of volatility within the investment space. So I believe that both the manufacturers index as well as the Stanbic PMI index is capturing the reality that is currently on ground.
Yes, I guess it's a tough time for consumers as well, producers, manufacturers, at this time. But what do you see? We're in September now. Do you see the same downturn? Do you see us going below that 50-point level, looking at these indicators in the month of September?
Okay, thanks. I don't think it would go below the 50-point level, but it may go lower or remain around the August level. When you look at the factors that determine the level where the indices in August, we've seen that in this month with the volatility, the FX supply has not improved, and we don't know at what level will it settle for the month of September. Fuel prices, which has direct impact on transportation costs and also business generation, business costs. We don't know if depending on where crude oil prices and FX also level at, if government would also be increasing the fuel price, because it's also based on the last statement. If it's also not increased and most of the factors or the actual costs have also increased, it means the money is also, the funding is coming from somewhere. So at the end of the day, it's zero-sum game. So it's really tough we feel that September is still going to be very tough, given the current position. The demand for goods and services continue to wane down because income is not increasing as much as cost is increasing. As a result, what people have to demand for, they are also reducing that, which would also feed into the production. So if as an individual, the demand used to be like maybe 1,000 based on quantity of a particular item, and now is at 800. It means I may not need the number of workers that I need to produce it. I may have to cut down if that demand is not going up. And you can see the ripple effect and their dependence, and that is how it affects activity within the economy. So
Right.
I don't think we're out of the woods, or there's something that will take us out of the woods for this month of September.
And talking about being out of the woods at this point, I checked on the oil markets and I see oil prices still, tending up at this time, $88 and up about 3 cents this morning. And definitely we know how that translates into higher prices, at the pumps. And definitely that gives me a lot of fear, right now, seeing those prices up. But we see current employment condition. As the rate of employment declined to 50.2 points from the 50.7 points recorded in the first quarter, but still remains marginally up at the 50-point benchmark. Then we have that debate about, the MBS adherence to ILO standards with the inauguration of the new Nigeria labor force survey, which, drove unemployment down to about 4.1% in Q1 from 33.3%. So this begs the question, is Nigeria's unemployment rate, in your opinion, is it low or high?
So if we look at, that's based on data, and I've not carried out any study, but based on the current situation, what leads to unemployment? Are businesses expanding? Are they taking more people? Businesses are shutting down. So if businesses are shutting down, it means that the rate of unemployment would increase. Small businesses are finding it challenging to expand. It means that capacity to absorb people into employment or get them engaged is reducing. Even the artisans, so if before you used to have like 2 helps to support you, you may have to cut them down because the costs, you have to increase their cost of transportation have increased. So all those things would have its impact. So I won't want to go into the methodology that's being used, but the reality is that the ability to absorb, to create employment is not there now, which means that unemployment is increasing and businesses are not expanding. Demand for those goods are not there. So there's a lot that needs to be done to be able to increase the capacity to absorb people into the system. I know the government has a lot of plan within the agri sector to see how they want to be able to create employment. So it's until all these things begin to translate into employment that we can see that people are beginning to get more engaged. And that you will see the impact. When more people get more engaged, you will see that impact in productivity, you see that impact in insecurity. And we also look at the poverty level, you will see that it will also moderate.
All right, Mr. Ebo, but talk to me now, what are the potential, consequences of, manufacturers' declining confidence in the Nigerian economy for the country's, overall economic health?
Okay, thanks. We are all looking at seeing maybe foreign direct investment or people investors coming to set up in the country. If the confidence is not there, it means for new investors, they will be more cautious. And as a result, we will not be expanding. There won't be more jobs because they would look at, for those that are currently operating, are they doing well? Are they able to expand? Yes, there may be the opportunity, but you also, based on demand for the goods or the gap. But when you look at the costs of producing it, will there be demand for those goods, or will you be able to survive as a company? We saw when you look at Nigerian exchange, for most of the manufacturing companies, the way the FX devaluation impacted significantly on their books. Yes, we may say, okay, that's based on financial making FX exchange losses. But in actual fact, for those that had access to the I&A window to maybe 20 or 30% of their total FX requirements, Now, the rate has been, they need more naira, increase it by 40%, more naira to be able to either import. Look at the telecom sector. It's setting up buying gens or looking at the equipment that they use. Most of them are in dollars, and it fits into the total cost at the end of the day.
All right. So looking at steps now, if any, that what do you think the government can do right now to boost, manufacturers' confidence in the economy?
Okay, thanks. One, we need the right roadmap. Let there be clarity about what government wants to do for manufacture. We know Nigeria is informal based and is also domiciled mostly SMEs. So we need a roadmap of how we want to take them out of the woods. How can we also provide support in terms of cheaper source of funding? Yes, we know in the past, most of the intervention funds might not have yielded the expected results, but that doesn't mean it is in some other climes. If you put the right control in place, it can create the right support for them if they're able to get loans at a cheaper rate. And security is also very key. If there's stability, there's a need. Once there's stability, there's in the economy, most people will also want to set up factories. And lastly, our export base has to be diversified from oil. There needs to be deliberate efforts. Look at those items that we are strong at, provide funding, and remove all the bottlenecks of exporting outside the country, so that we can begin to generate effects. And once we're able to get that, there will be stability in our naira, because that's also feed into everything, because we are import dependent as a country.
All right, Mr. Ebo, so much to do at this point. We need a lot of dollars back into the Nigerian economy at this time to get some strength into the naira. Thank you so much, Mr. Ebo, MD Optimus by Afrinvest. Thank you so much for coming today.
Always my pleasure. Thanks for having me.